Imagine a bustling marketplace, but instead of fruits, veggies, or handmade crafts, this market deals in pieces of companies. Welcome to the world of the stock market. Dive in as we unravel the mysteries behind those of rising and falling numbers you often hear about in the news, the great bazaar of business. At its core, the stock market is like a giant store where you can buy and sell parts of companies known as stocks or shares. Picture it like a pie. When you buy a stock, you're grabbing a slice of that company's pie, however big or small. Why do people buy stocks? Now you might wonder, why even buy a slice? Well, as a company grows and makes money, your slice of the pie could become more valuable. That means when you sell it, you might get more money than what you paid. It's like buying a toy, and after a few months, everyone wants it, so they're willing to pay more for it. The big electronic auction. But where does all this buying and selling happen? Think of it as a huge electronic auction. People shout, or rather type, their offers. I'll buy this, or I'll sell that, until bam, a deal is made. The influence of news. Imagine waking up to news that the toy company you bought a slice of just made the coolest toy ever. Suddenly, everyone wants a piece of that company pie. That's how news and events can make stock prices swing up and down. If companies do well, their stock prices might rise. If they face challenges, the prices might drop, riding the waves. The stock market can be like a roller coaster. There are thrilling highs when prices climb and stomach-churning drops when they fall. But just like roller coasters, the key is not to panic. Many investors aim to stay in the ride for the long haul, believing their choices and hoping that ups outweigh the downs over time. Companies go public. You might be wondering, how do these companies end up in the stock market? Well, there's a special event called an initial public offering, or IPO. It's like the company's grand debut when they decide to sell parts of their businesses to the public for the first time. It's a big step, like a local band holding their first big concert. Stock exchanges, the meeting points. Just like we have different malls or markets, stocks are sold on specific places called exchanges, like the New York Stock Exchange, NYSE, and the NASDAQ, are like mega malls of stock trading in the United States. They set the rules, ensure fair play, and are the stages where the drama of stock buying and selling unfolds. Beyond just companies. While a lot of action revolves around companies, the stock market is also home to other exciting things. There are bonds, which are loans you give to companies or governments in exchange for interest, mutual funds, a mixed bag of stocks picked and managed by experts, and even ETFs, baskets of stocks that track certain themes or industries. It's like a supermarket with different aisles for different financial products. Safety nets. With all this buying and selling, what if things go wrong? Fear not. There are watchdogs and rules in place. Organizations like the Securities and Exchange Commission, or SEC, are like referees ensuring everyone plays the game fairly. Diving deeper. You've probably heard stories of fortunes made and lost in the marketplace. While the stock market offers potential rewards, it's essential to remember the risks. Just like in any game, there's no surefire win. It's a blend of strategy, timing, and sometimes just unpredictable ways of the world. Building a strategy. Smart investors don't put all their eggs in one basket. They spread it out, investing in different companies or sectors, a strategy called diversification. It's like not betting all your money in one racehorse, but spreading it among several, hoping that at least one sprints to victory. In the world of investing, there's a lot of noise, prices going up and down every day, news headlines trying to predict the next big thing. Amidst all this, buy and hold investors stay calm. Instead of trying to time the market or jump on the latest trend, they buy stocks in solid companies and then just wait. Historical returns. Now, why would someone adopt such a seemingly passive strategy? History provides some compelling answers. Over the past century, the U.S. stock market, represented by indices like the S&P 500, have returned an average about 7% annually after adjusting for inflation. This doesn't mean there haven't been down years or even decades, but over the long run, the trend has been upward. Compounding, the eighth wonder. The magic behind buy and hold is the power of compounding. Let's say you invested $1,000 and earned a 7% return. By the end of the year, you'd have $1,070. The next year, you're not just earning 7% on your initial $1,000, but the full $1,070. Over 30 years, that initial investment could grow to over $7,600 without you adding another dime. A lifelong journey. Many approach the stock market not as a sprint, but a marathon. It's not just about quick gains, but building wealth over time. The magic word here is compound interest. It means your money earns money, and then that earned money earns even more money. It's like planting a tree and the tree bearing fruits, and those fruits bearing more seeds that become more trees. Over time, with patience and smart decisions, the forest grows. The world of the stock market is vast and can seem complex, but at its heart, it's just a place where people come together to trade, invest, and hopefully watch their money grow. It's a testament to human ambition, dreams, and the belief that with research, patience, and a bit of luck, anyone can find their slice of success in the grand marketplace of possibilities. Wythdrawl Investing Insights, signing off. Remember, this is not to be construed as investment advice.